The market just hit new all-time highs this week, but what about your portfolio? There were some really big names that took some really big hits this week, like Nvidia and Microsoft, but also some like Google and Apple and Walmart that seem to be performing like crazy, as well as Broadcom. So we're going to cover those stocks and a ton more, and I'm also going to give you the most popular stocks that are happening over on Wall Street Bets on Reddit, and I'm going to give you my top stock picks going into the weekend so you could take a look at those on Monday when the market opens. So let's start with, of course, the S&P 500. Let's start with the SPY. What do we see here? The SPY, the market still has a buy signal. So that's good. We want to see the market having a buy signal because the market, of course, a rising tide lifts all ships. What's the market doing? The market is still strong. But we have the 10 over 20 price over 50, which means it's in a bullish trend. There is a problem here, though. The fear and greed in the SPY, the S&P 500, is going down hard and fast. Greed peaked actually back on July 30th and has been going down ever since then. And let's see where July 30th was right here. Right here. The market's gone up a little bit since that point, but mostly choppy to sideways. You're not the only one who's been really frustrated in the market over the last couple of weeks. And that's because people are getting less and less greedy, more and more fearful on the market. Now, here's something that you've got to keep in mind. Even when this starts to come down, that is not the time to be getting aggressive. If the market's greed is moving down, that is as clear as day sign to you that you need to be holding cash. I'd like to say is sitting in cash and not effing up your portfolio. Okay. I know it's boring. This isn't the most sexy thing in the world, but if you want to survive and make the next trade, a lot of times sitting in cash and not effing up your portfolio is the trade to make. So let's move on and let's look at some stocks that you probably have in your portfolio, like Robinhood, right? This is in the financial sector. The financial sector, actually, it's been growing on the fear and greed. It's been growing on breadth, meaning more and more buy signals. So that's a great start. The market has that trend and signal working in its favor. Market breadth has been really helping us out to know when to get in and when to get out. And when we look over at market breadth, we can see it crossed under. It has bearish breadth right now. It needs a breadthment. And because of that, I wouldn't be getting into anything. However, right, I wouldn't be getting into anything, but you absolutely can. Of the Outlier 9, however, Robinhood's not looking so hot. It's got a bearish trend. It's got a sell signal. The fear and greed is going down, right? It's no longer the darling that it was a few months ago. It's getting way more fearful, but it doesn't have any outlier blocks in its way. So let's go take a look at the chart real quick. Yeah, Robinhood is just not what you want to see. It does have some room up to this order block right here. It's got about $10 of room. I like to say 2% or so up to any resistance points. And you can see how well this support point right here, this support order block worked on Robinhood. So that's a great start. Let's go to the next stock here, Rocket Lab. Maybe you've got Rocket Lab in your portfolio. Rocket Lab actually is a pretty interesting stock, right? It's been rocket shipping lately, but it encountered a giant order block that it just is really, really struggling to get through. Now, what are these order blocks? These are areas of large support or resistance that a stock basically has a ton of sellers sitting and waiting to get out at break even. And when they can get back out of break even, that pushes the price back down. But let's take a look over at Rocket Lab here. We can see the market will not change on any of these. The sector, however, the industrial sector, the fear and greed is going down more towards fear. The breadth in the sector, more and more sell signals. So that's not going to help you at all. Then the stock, the trend is, it is up. The 10 is over the 20. Price is over the 50. That's the outlier trend template that you're looking for. Now, here's the deal. That can mean that it's going to have an explosive move like this. It will only happen when the 10 is over the 20, price is over the 50. But it can also mean it could go sideways like this. So just because it has an uptrend in place doesn't mean it's going to have explosive growth, especially when you have 4 out of 9 working against you, right? You have a sell signal, you have waning fear and greed here. No outlier blocks in your way until 48.55. How much room is that? How much room is that? So you've got about, hang on, why didn't that work? You've got about 6% to that order block there. Like I say, my rule of thumb is 2%, so you do have some room. But overall, Rocket Lab is not looking beautiful to me. Let's see the next stock here, SoFi. I was a SoFi bro for a minute, and I seem to be the only one person in the entire world who didn't make money on my SoFi trade because I follow my trading plan. And that's okay, right? I need you to make sure that you create your trading plan and follow that. Don't worry about the FOMO. Don't worry about everybody else. Focus on your trading plan. Now, looking at this is in the financial sector. Fear and greed's rising. Breadth is rising, just like it was in Robinhood. The stock trend is up. The signal, though, it's got a sell signal. Fear and greed, though, fear and greed is going down hard and fast. And SoFi, let's go take a look at SoFi's chart. I mean, SoFi may really struggle to get past this $25.60 area. $26.61 seems to be about the high. It may be struggling to get through there, and it certainly has some issues ahead of it with the sell signal, with people getting less greedy in the stock. Let's move on to the next one here. Maybe you've got Palantir in your portfolio. Man, Palantir is not what it used to be, is it? Right? You probably could be holding on to Palantir saying it's got to come back. It should come back. Let me tell you right now, the most dangerous word in finance is should, because we can't impart what we want the market to do, right? We can't tell it what it's going to do. At some point, I decided to draw on this chart over here. Looks like I'm not too far off, right? At least it's close to where that point is. Honestly, I don't remember what that was for, but the stock is in a clear downtrend. The 10 is under the 20, price is under the 50. And we can see here, it's lost the trend. It's lost the buy signal. The fear and greed, oh, you know what? Fear and greed has bottomed, starting to come back up. Doesn't have any outlier blocks. Oh, not until up here around 185 or so. So yeah, this is 4 out of 9. This is a stock that there's no way I'd be putting my money in this. I wouldn't even be buying it with your money. That's how I feel about it. Lululemon, good freaking Lord. I don't know why this is the top stock here on Wall Street Bets, but Lululemon is a dog crap piece of junk stock. Look at this awful chart. Let's go to Lulu's chart. This is a horrible stock. Why in the world do you think that this is the time to buy this stock? This is the most obvious clear downtrend of all time. And then it just sunk how much on earnings? How much is it down? I can't even see it. Hang on. Add it to my chart over here. It's down 18%. It's down 18% today. And if you are still holding it thinking, oh, here we go, it finally found the bottom, bro, what are you doing? The market tells you where the stock is going. Trends do change, right? Just like an AMD, it went down for months and then it went up for months. And we're going to look at AMD in just a little bit. Don't be worrying about that. But Lululemon's terrible. Terrible, no good, very bad. It's got 5 of 9, but the ones that really matter the most are the trend, right? If you don't have a bullish trend, it doesn't matter if the fear and greed is going up. This is a terrible stock. Let's go to the next one here. Broadcom. Broadcom had some interesting results, right? AVGo. Didn't it pop up? Yeah, it popped up bigly. Broadcom was up. How much is it up? 9.41%. So Broadcom up bigly today. What did Outlier have you doing, right? We've, let's see. You got the trend, but it didn't have that buy signal in place, and that's all right. It happens, right? The tech sector's fear and greed is not helping you out. Fear and greed's going down. The breadth is not helping you out. And that's probably one of the reasons why it didn't maintain this. Now, I'm going to give you a little tip here. If Broadcom closes underneath the low of that candle, consider that a gap and crap. If it gaps up like this and then goes under, consider that a gap and crap, get out of the way. But if it gaps up like this and then continues on, that's a gap and go. That's a beautiful trade. You can really do really well on a gap and go. But a gap and crap, no, thank you. I'm not interested. Let's go to Open Door. Open Door's got a lot of attention here, but it does have a sell signal, right? So if you are still holding Open Door, look at that. Just crossed right through another order block. Now may be a time. Listen, I'm going to be wrong in both ways, right? I'm going to tell you that it's time to sell and it's going to go up, and I'm going to tell you when it's time to buy and it's going to go down. I can't win in this situation. I can only look at the data that's presented in front of me. It has 7 of 9. The one that concerns me a lot is that sell signal right there. So just if you are holding Open Door, make sure that you know where you're going to get out, right? What happens a lot of the time, this is called the 50-80 rule. 50% of the time, a stock like this falls by 80%. But 80% of the time, a stock like this falls by 50%. I don't want that to happen to you. So if you're still holding Open Door, know where you are going to get out. Let's go to Nvidia. Nvidia is a hugely popular stock, of course, but it has 3 of 9. 3 of 9. It's got a bearish trend. Nvidia in a bearish trend? That's impossible. No way. Nvidia's in a bearish trend? Oh my goodness. Call the fire department. What is happening right now? This can't happen. This stock only goes up. Don't you know it's AIs and GPUs and stuff like that? Make whatever story you want to make. Looking at the data objectively, this is a bad place to be putting your money. Right? We have 3 of 9. The stock is trending down with the sell signal, getting more and more fearful. It doesn't have any outlier blocks in its way, so that's helping it. But the whole sector in general is looking really bad. And I bet if we look at AMD, where's AMD? Right there. It's going to say a similar story, right? We've got pretty much the exact same setup here, 3 of 9. And if we even compare side by side, this and AMD. Hold on, I got to get AMD to today. Yeah, both of these look terrible. Both of them look awful, right? They're both in downtrends. Now, I got a lot of AMD haters. That's fine. I don't care. You AMD bros, you do you. But I was saying AMD is a terrible buy all the way down on here. And it was. May 7th, it flipped and had a bullish trend. And you cannot have explosive growth without explosive trends. And that's exactly what happened. And then I called and I said, watch for this overhead order block. And bro, the amount of comments I got was ridiculous. Oh, you don't know what you're talking about. This guy's so dumb. Bro, order blocks work. And if you're holding it, riding right up into there, what do you think is going to happen? These are sellers who have been trapped for years. They're selling out as fast as they possibly can once they get to break even. That's what happened to AMD. Now, both AMD and Nvidia are in huge, ugly, nasty downtrends. Does that mean that they're going to go to zero? No. But what that does mean is that, mathematically speaking, no crash has ever happened with the trend being up. Crashes only happen as it's trending down, mathematically speaking, right? You can't debate me on this. When the 10 is under the 20 and price is under the 50, that could be the start of something awful. Your choice if you want to hold it all the way down. Your choice. Let's move past AMD and Nvidia to Tesla. Tesla. This is in a discretionary sector. It's not a tech stock as much as you want to think it is. It's not. Has bearish breadth in the sector. However, fear and greed is growing in the sector. Now, the only thing working for the stock itself is it is in a bullish trend, but it has a sell signal. The fear and greed is not helping it. And then there are outlier blocks on top of Tesla. Let's go take a look. Let me make this back to 1. Let's go back to Tesla. It does have this one up here. There's not one in the way, but either way, Tesla has a lot of support. Look at all the support coming through this outlier block down here. This is what I'm trying to tell you. These things work. These things work. It's crazy. Now, Tesla, 4 of 9 is not a stock that I'd be interested in. But I want to take a look at some stocks that I could be interested in, some that passed my screener in Outlier. Now, you're probably asking yourself at this point, what is Outlier and how does it work? Well, old Uncle Warren used to say, be fearful when others are greedy and greedy when others are fearful. Outlier shows you if investors are acting irrationally fearful or greedy and by how much, allowing you to get in the stock before the Outlier move happens. Now, if you're ready to save time, make money, and start winning with less risk, it's just 3 easy itty-bitty baby steps. Step 1 is head on over to outlier.com, grab the annual pass for just 82 cents a day. Or if you're on the monthly plan, upgrade with 1 click and save 64%. Step 2, use the Outlier 9. I'm showing you how to do that. In fact, in Outlier 4.0, it's right there in front of you. It makes life so much easier to just look up here. You don't have to bounce back and forth between your list or PowerPoints like I had been doing. It tells you right on the screen if everything is set up for this stock. My goodness, it gets easy, right? And step 3 is sit back and relax because you just found the easiest way to save time, make money, and start winning with less risk. So let's go to our next stock. And this is coming from my screener criteria. Now, on these screener criterias, let's look at the first one that pulled through, ADI. This is Analog Devices, Inc. It still doesn't have the Outlier 9. Even with my screener criteria in place, it still does not fit the Outlier 9. So I'm not trading it. No way. Fear and greed and breadth in the sector, in the tech sector, are going down. Fear and greed's going down. Breadth is going down. Now, the stock itself has a bullish trend, has a buy signal, has rising fear and greed, and it doesn't have any outlier blocks in the way. So the stock itself is great. But remember, 30% of the stock's move is just due to the stock itself. 40% is due to the market, 30% is due to the sector. So 70% is not due to the stock. And that's why we look at it from a top-down analysis here. So ADI, even though it is my top pick on my screener, is not one that I would be trading even with your money. Let's go to the next one. AIG in the financials. We have 8 of 9. It's never going to get the breadth because that's universal across the market right now. But 8 of 9 is pretty dang good. All right, we got a buy signal. We got a bullish trend. We've got the fear and greed rising on the stock and in the sector. So overall, AIG looks a lot better than the one just before this, right? Oof, but AIG's got a big, ugly, nasty red candle. And here's the deal. Here's the deal. When you trade, wait till the end of the day, because then you can see what data is pushing through. So AIG had a big, ugly, nasty day. And even though it's set up 8 of 9 over here, it's still one that I would be avoiding. In fact, I'm avoiding all stocks right now because the S&P 500's fear and greed is going down. I want the fear and greed going up. Trading should be effortless. If trading is hard, you're doing it wrong. Let's look at the next one. Amazon came up on my screener. In the discretionary sector, like Tesla, everything looks really lit up except for the sector breadth and then the outlier blocks on top of Amazon. Let's see. Do I have Amazon over there? No, let's see. Amazon. Yeah, it's sitting right here in this order block. This is going to be a hard area to get through if you own Amazon. And our final one that we're looking at today, ASB. This one also came through on my screener here. Pretty much the same place as we were on Amazon. 7 of 9 in the financial sector. And let's go look at ASB. Again, another stock in these outlier blocks. So at the end of the day, what I'm trying to show you here is that there may be lots of opportunities for you, but that doesn't mean you need to be taking all those opportunities. Right now, Chris has his money in cash. I'm sitting in cash and not effing up my portfolio. And I know that that's boring. But you know what it's not doing? Is losing money in my account when the market is not set up to be going long. So heed those words of warning. I hope that this has been helpful, and I'll see you on the next time. Be sure you save time, make money, and start winning with less risk by clicking one of these 2 videos. We'll talk soon.